So Nicholas Bornois, again of Capital Link, I would like to welcome you all to another extremely interesting session. This one will be on the sales and purchase and new building markets and the impact of technology, finance, and regulation. Fleet maintenance and fleet renewal are the ongoing and one of the most important topics any ship owner is facing. And I am delighted and privileged to have with us such a group of distinguished panelists. So without any more delay, I will turn it over to Nicholas Brown from Bureau Veritas, and he will introduce our panelists. Again, thank you to all for joining and for your support.
Okay, Nicholas, thank you very much. Great to see you again. Thanks for inviting us all to be here today. So good morning, good afternoon, and good evening, wherever you are. My name is Nick Brown. I work in the Marine and Offshore Division of Bureau Veritas, and I'll be helping moderate this session. Hopefully you'll hear a lot, well, not too much from me. So as Nicholas says, this session is about the sale and purchase and new building markets and the impact of technology, finance, and regulation. We've heard earlier today in this forum about the impacts of technology, finance, and regulation. So how will the freight rates of today's shipping markets impact ship operations, fleet maintenance, and fleet renewal? Different markets have different dynamics, and when you look at earnings for crude oil tankers, the charts look like they're mapping the ups and downs of a very bouncy rubber ball that's completely run out of energy and is rolling along the floor. VLCC average daily earnings, I read from one shipbroker's weekly report today, from Middle East Gulf to China, revived last week, week on week, by 45% from $65 a day to $91 a day. Yes, 91 individual dollars. In 2020, average earnings were over $50,000 a day. So although asset values remain robust, is that in misplaced hope or educated expectation? Meanwhile, bulk carriers have been going the other way, earnings moving from new peak to new peak, but it's container rates that have really been a lift-off. And so we've seen values rising there considerably. And as your Capital Link agenda program says, a greener industry is a one-way road, but how do companies navigate the uncertainty of fuel types and infrastructure, rapid technological developments, and new regulatory requirements? So the panel will provide the viewpoint of major stakeholders from different angles: some shipbrokers, a ship owner, a technology provider, and a classification society. What's going on? Decisions being made now, and the outlook today will shape tomorrow's shipping world. Well, we've got a great panel from all those perspectives who are going to tell us. On our panel, we've got two shipbrokers: Richard Fulford-Smith from Affinity, Mr. James Gundy of Braemar. Our ship owner is Mrs. Lewis Zabrocki, the President and CEO of International Seaways. And we have from Classification, Mr. Paolo Maretti, CEO of Rena Services, and Mr. Andrea Morganti, Vice President, Marine Power and Strategy for Wärtsilä. Great to see you all. Can I start with the shipbrokers? James, can you please tell us what's happening and what's going to happen in the sale and purchase and new building markets in the days, weeks, and years to come? You're on mute, James. There we go.
Sorry about that. Okay, first of all, I want to say thank you for inviting me on the panel today. It's very appreciative talk from us at Braemar. Look, obviously, you alluded there, you know, the first aspect was the fact that there's a huge disparity between the various markets today. That's obviously not the first time that's happened. And I think that, you know, from where we were back in 2006, 2008, you could see at the time, most markets were definitely at a firm peak. Now we're starting seeing a massive movement from last year, where the tanker market was obviously, with the oil going into a negative price, the market and contango movement, it was definitely in the right way. But now, I think from my perspective, looking at it, I think that the most important factor for any kind of ship owner is just to strategically look to where prices are. And I think you said earlier, obviously, buying at the right time and being brave at the bottom as opposed to moving at the very top of the market, which obviously can cause uncertainty. And in today's world, there's so much uncertainty going forward with today's new, potential aspects of fuel, which we discuss, which we will discuss later on. I'll leave the experts discuss that. But I mean, technology is huge, and from from where we're seeing that, they're slightly unsure. But from me personally, I think it's difficult to really align what is the right move on fuel, because a lot of it, I'm not saying it's here, saying I know why we need to go down this avenue because of ESG, et cetera, et cetera, et cetera. But from my perspective, I think that there should be the main key factor to reduce ESG in the early part is probably slow steaming and potentially taxation on bunkers, and obviously using the cleaner engine in economical engines going forward. Now, we know that we could move into the aspects of dual fuel, which has been the recent conversation. The problem, as I mentioned before, is the fact that that is a higher cost factor than over and above of conventional engines. And that at the moment is hard to pass on, so to either to the receiver or to the producer. So that's obviously an issue to be discussed today, I believe, because as I said before to Lois, the fact is that unless there's some fixed contracts on maybe dual fuel, it's a big gamble to take these early decisions on jumping in there for a spot basis, especially when you look at the situation of the present spot market in tankers, which is obviously, as you just said, exceptionally low. So I guess what I'm saying is that you can see this graph move up and down on various different sectors, and it's amazing. 1 week you see 9,000, you see 200,000 on containers. It just shows it's a very bumpy road in shipping. It's a supply and demand basis.
Okay, that's great, James. Thanks for getting us started there. And so you're not anticipating an end to the extreme cyclicality of shipping?
No, I'm not. I think that's going to be something that's happened. It's happened for many decades. It's going to continue happening for sure. But I think the world is evolving in many places, in many areas, which makes shipping exciting. And of course, there's full of surprises. I mean, many movements and swings in markets are not necessarily predicted by an analyst. It's certain things that happen that none of us can sit here and say would have happened or hadn't happened. And that's whether you're the right side of the market at the right time. Many people can sit here and say they caught the market on the right by luck, as opposed to what they were thinking at the time. So, yeah.
Okay. Okay. Thank you, James. Richard, can we go to you?
Yeah.
How do you see things at the moment?
Yeah. Hey, listen, thanks very much indeed again for inviting me on. And I've done a few of these panels before. This is an easier one than normally, because what we love to do in shipping is to be ridiculously over optimistic at all times. Don't we, Lois? And, if you're in a bad place, which the tanker market is at the moment, you need a lot of optimism to invest there. But you also, as James says, need to understand that we have cycles, and we overshoot at the top, we overshoot on the bottom. At the end of the day, investors are looking to get a return out of shipping, and they'll select whichever sector they actually believe in based upon their ability to function within that. We have areas of industrial shipping which traditional ship owners will find difficult to get involved in. The liner companies dominating the container market, that's been the market that has sponsored so much immense demand in the shipbuilding industry. Shipbuilding at the top end and all the way through determines the cost of replacing ships. And people actually buy ships based upon the psychology of where they are in the market cycle. And we believe that we're actually on a low point in most of the markets right now, or rather we were. We were when we were going into 2020 and what happened with COVID. COVID kind of interrupted the normal flow. It created a totally artificial market in the tankers, which sponsored a lot of interest in building ships in the second half of last year. We had the exact opposite in the gas market. It was cratered, and we had very little demand for new ships. We then had this container boom, and that sucked the life out of the shipbuilding market for all the competing sector, because guess what? If you're an owner of tankers and you're suffering immensely, the last thing you want to be told by somebody like me or James is, by the way, you're going to have to pay 20-30% more than you thought you would have had to have done a year ago. The liner business can afford to pick up the bills. They can afford to go down the only route which is genuinely fundable in the banking community, which has largely gone missing. The best time to buy ships is when the banks have gone missing. They've gone missing. Well, that's because shipping was a high-risk business. No, psychologically, we're in a good place. We're talking about the super cycle. It's much of your theme. I do believe that we are in a crisis. We don't have enough shipbuilding capacity. I'm not the first person to say that. Fleet replacement will drag the prices of other vessels up. Whether anybody can help the tanker market, I'll let Lois describe, because she's very committed to that. But no, I'm sorry to say it, chaps, but I think the die has been well cast. I'm not going to talk about the dual fuel because you asked me not to, beyond saying the LNG market looks pretty bloody exciting to me, and look at the commodity price. Demand is robust. We need to be taking FID. One thing I will say, there's an awful lot of legislation being talked about at the moment that actually people sanction certain segments of our industry. I wonder really where it's going to be policed, because it's all fine and well to introduce, including EU ETS, on the 14th of July, which I think was a landmark part of what we're talking about going forward in the future. But who's going to police all this? Will ships be taken out of certain trades because they can go and hide elsewhere? Well, that's not going to address the imbalances that exist, for example, in the tanker market, where we're overdue to scrap a large amount of fleets, half of which disappear into a Dubai-based company and operate as a ghost ship, which artificially brings the tanker market into more difficulty on the big ships. So that's what I have to say. Psychology looks pretty good in certain sectors, looks horrible when you're carrying hydrocarbons that are not popular, but we can't all hug trees and we can't all bow to Greta's better and bigger demands for shipping.
Richard, that's fantastic. Another great start. So we've heard from the shipbrokers. We'll hear more from them, I hope. Andrea, can I go to you and just ask you, as a technology provider, you're very focused on new engines, new fuels, propulsion systems. How are you seeing your opportunities and the implications of what's going on in the new building markets for your business?
Yeah, thank you for the question, and thank you for having me. I have to say I'm humbled to be part of this panel. From a technology perspective, maybe we should start by saying that that's not really what is holding back decarbonization. Technology already exists today to drastically reduce emissions. We started talking about, I think we verified biomethane and synthetic methane in 2003. 2015, we did the first methanol conversion. We are far into testing of ammonia and hydrogen as we speak. So it's not really, I think it's exciting to see that we are trying to look at evolving, moving from a single fuel to multi-fuel, but technology to do that is here. And what we are actually seeing now is two things. On one end, working with customers, understanding also what is the availability of these fuels. I mean, I think the issue is not really on the downstream, is upstream. And for this reason, when we talk about moving to zero emission vessels, often the projects that move fastest are captive projects that are their whole entire ecosystem included. And those are good projects to test the technology, to also give, to build up references, to give more certainty to customers who want to build. Another path we are following is working with customers and looking at their fleet, and based on the age of the vessel and characteristics of the vessel, see what kind of technology makes more sense to cope with the new regulations. So it might not be in some cases actually to go to a full fuel conversion. Can be that something else that just reduces the carbon footprint, energy saving devices, and so forth. Or when planning on new builds, working together in guaranteeing a path, an upgradable path. Because if you're building today, of course, today you have the fuels you can get today, but you can take measures to make sure that you could switch later on and during the lifetime of the vessel to a different fuel, minimizing the impact of that. I would say these are the key factors. On the regulation side, of course, we are monitoring and participating in the discussions. To me, what is interesting is that we're used to look at the IMO as the key part and the key regulating body. But what the EU showed in July is that that's not necessarily the case. If IMO doesn't succeed in moving fast enough, then you end up having packages like the EU Fit for 55. Maybe it will take 2 years to become law, but there are 4 different, the package covers many industries, but there are 4 different directives there that have a direct impact on the maritime, and among which you have, the EU defined its own way of calculating greenhouse gases. So from a ship owner perspective, what do you look at? Is you have the IMO way, then you have the EU way, maybe then there will be US way and the China way. So there is the other thing is that, of course, a regulator like you looks at well to wake, not tank to wake. So maybe even the perspective on the fuel you might be using is different. So all of this is I mean, I like to look at it as exciting. I mean, there is clearly a lot. This is building momentum, but at the same time, I think regulators need to come together, and we have to hope that there is going to be international alignment. Otherwise, it will be very, very difficult to take decisions for at least vessels that are supposed to trade internationally.
Andrea, that's great. And what I'm hearing there partly at the end is the need for the shipping industry to be able to talk to stakeholders beyond the business. I mean, we're great at talking amongst ourselves, but there's a sort of theme of collaboration, which maybe has been, poorly described in how that actually happens, that's going to be needed now. Thank you. Paolo, can we take you next? Partly in response to what Andrea is saying, how do you see that landscape now, and particularly maybe that element of regulatory overlap that's going to complicate our lives at the very least?
Nick. Hi everybody, and thank you for having invited me in this very exciting panel. I think I can subscribe and agree on what Andrea has mentioned before. We cannot waste time or hope that some regulation will allow us to cut corners, because immediately the day after we will have local regulation, as we have seen, that will come up and say, okay, if IMO is slowing down a little bit, then we will have EU that will play its role. I think that here we are talking of short-term, medium-term, and long-term measures. The long-term measures that are up to 2050, the 50% reduction in the greenhouse gases, and within the century, the possibility to arrive into zero greenhouse gases emissions is something that we have to accept. It's something where we will have to arrive for sure. What I think is to be clear is that at the moment, we don't have the solution that is fit for all. We have to accept the fact that we have to make research in all, keeping all the options valid. When I say all, even sounding unpopular in these days, they are coming back with the nuclear in various industry. I think that also that one we should keep alive. We should keep alive producing hydrogen or ammonia with in a blue way with the carbon capture, or in the green way with the renewables. What is important is that we are not in the driving seat as Marine. I mean, we will not decide ourselves what is the fuel that will go on board in 2050, because we have to understand, as usual, what is going on in a wider landscape of other industries. And so I think what is important for the long-term strategy for classification societies and companies like RINA is really to try to remain involved in all the projects in cross industries. For example, we are working on the trains. We have trains now that they had the problems of, let's say, leaving the fossil fuel, and instead of going to electricity, in Italy now they are running with hydrogen. So we are having examples of big pressure vessel built in iconic mountain area to at the end give the logistic for train that will produce only water, because they will go with the fuel cell and hydrogen. We are seeing the use of hydrogen together with LNG to reduce the emission in the steel production. So I think that we have to maintain these strong engineering competencies in understanding and try to do some cross-fertilization with all the other industries. But of course, 2050 is far away. Now we have the immediate problems that, of course, for what are the so-called short-term measures that to me are the EXI and CII will probably go in the direction of changing the operational profile, doing some derating of existing ship power, and at the end reducing speed. But what if we want to order a new ship now that is ready for 2030? So the so-called mid-term measures. Now an owner who has to invest, he has somehow to feel confident that he's putting his money in something that will not lose its value in 7, 8, 10 years time. So I think this is one of the key requirements now. And again, it's going to be a mixture of operational saving, new solution to change the consumption profile of the vessel. But to me, this is my personal view as RINA. I also think that we have done in these years some investments, for example, in LNG. LNG has always been defined as the so-called transition fuel. I think it's still a bridge fuel, this one. I think that, for example, if you are going to place an order for a ship that is fueled with LNG now, then the ship could be retrofitted and be used with a synthetic methane in the future, or even a mixture of LNG and hydrogen, or even in the future only hydrogen. So I think that for what are the midterm measures, I would that is the immediate necessity of ordering ships for those owners who can afford this. This is not only the only solution, but for example, still keeping an eye to the LNG as let's say primary fossil fuel for this transition is an option, and maybe also change some paradigm that we have always given as something that cannot be changed in the maritime business. So, for example, with Varsila now we are studying the possibility of changing the typical design of bulkers and tankers that are typically running with 2 strokes main engine and 3 diesel generators to a new configurations with 2 main engines, one bigger and one smaller, 4 strokes with control of the propeller and only 1 generator in standby, shaft generators and batteries. So I think we should make some review of the existing design, coupled with the possibility of running the vessel with LNG. You will probably add more guarantee and more and being more, let's say, somehow protected from the future change. Thank you.
Paolo, that's super. Many thanks. That's a really broad review, and you know, I like the framing of the short, medium, and long term. Now, finally, Lois, having heard all that from our 4 men on the panel, and you're the ship owner, you know, do you feel like you're in the driving seat? And you know, what are the short, medium, and long term options to you? You know, with hundreds of millions of dollars of tankers in your fleet, and maybe hundreds of millions of dollars more to be ordered. What's the future?
Well, you know, I would say, Nick, being in the driver's seat, I feel owners are rarely in the driver's seat. In fact, you know, we have so many constituents that need to be satisfied. One of the things I think that's great about this panel today is that it demonstrates, you know, to me, the brokers are, you know, really where the rubber meets the road a little bit in our business, because they are talking to classification societies, they are talking to the yards, they're talking to the engineers, and they're seeing what is possible or what is coming to be possible. And then, you know, they're putting, you know, all of that together with us as owners and bringing into that, you know, Andrea is talking about some of these technologies are ready. However, what are the, you know, availability and what is the steady supply of those materials, and are they toxic, and how will they be handled? And all of this has to get rolled into, you know, the practicality of running a fleet. So I also like, and it's a bit how I think about the fleet, the short, the medium, the long term. In the short term, every time we're putting a ship into dock on some of our, you know, I don't think they're, you know, we build ships for 25 years, but okay, some of our older vessels at 14, you know, we're putting on the slick paint. We're, you know, optimizing the Mavis ducts. You know, you're taking every measure that you can to that vessel to improve, you know, if it's 5%, you know, you're looking to improve that vessel's ability to compete and to lower their emissions. And then when you move all the way through to the longer term, we are building 3 VLCCs at Daewoo that are dual fuel, and they have the high-speed engines, right? So you're going for the lower methane slip, but you see this constant improvement. Previously, the lower speed engines that have more methane slip were the de rigueur, right? So, you know, you have to constantly now be kept up on the latest technology. But one thing at the moment, and I don't know that this will be a long-term trend, at the moment, LNG is quite pricey. So it's not just the CapEx, which was referenced earlier. So, you know, we were lucky with Shell's timing, putting the orders in at 96 million at the end of 2020. Same ship today. I don't know, Richard, what do you think, 110?
Probably 112 to 115, depending on the size of your bunker tanks, Lois.
So, you know, that's a piece of the puzzle, is the CapEx up front. However, even though LNG is more energy dense than conventional fuels, if you look at the pricing today, if you're running on LNG, it will actually be more expensive. Now, we're in a very distressed place on tankers at the moment, but if you want owners to go out and order dual fuel vessels naked without charters, that becomes a big factor in how they're thinking about things. So the moment we're at, to me, is it's taking us from commodity into engineers shine because they have that technical capability. The brokers are out there talking to all the yards and what they can do. And all of this is going to come together. And I don't know that there's going to be only one solution, because, you know, if you want to go ammonia, that can be super. But like I said, you have to secure your chain, right? So Shell, being a massive gas owner, just contracted for a bunker barge that can do LNG. And they will do that around the world so that they can ensure that these dual fuel LNG vessels can be bunkered in normal trading routes. So there's a lot of complexity and pieces that all have to come together, I think. And, you know, but as a ship owner, we're definitely not the boss of this. We are just dedicating a lot more time and learning to, okay, what's going to be the breakout fuel? How practical is it? When's it going to be available? And then, you know, making sure you optimize your fleet in the meantime. And the one thing I said that you said, Richard, let us never, ever, ever leave our lips again that there's not enough shipbuilding capacity. Because I learned in 2007 and 2008, I think we got schooled pretty good in shipbuilding capacity. What do you think, Richard?
I'll tell you what I think, Lois. I think we haven't got enough shipbuilding capacity today, but tomorrow I wouldn't be surprised to see an awful lot more coming back, because that's the cycle of shipbuilding. Shipbuilding cycles and shipping cycles, I'm afraid to say, are going to continue to ensure that we're oversupplied in certain markets where people get over enthusiastic and not. But can I just say to you, Lois, I think the most important thing is that we have to be the bridge in a certain way between all the theories that are out there at the moment, and we actually have to address what is a major crisis for shipping at the moment, and that is very much down to COVID and the uncertainties. But Lois, you've got a commitment to a tanker industry which is struggling, and I feel for you in that, because the way your business model works, other people have the ability to be in different legs. And we talk in shipbrokers about, you know, having a terrible tanker broking market at the moment. But thank God we got a bit of dry and a bit of gas and a bit of this. What do you think about being like we could have been if we'd been a very specialist company? You know, it really is very tough for a VLCC owner and Suezmax owner, where you've got such a huge imbalance. Ton-mile demand is actually so weakened at the moment by COVID. Are you tempted to look at maybe looking at my very expensive gas? Because that's what I've been trying to get you to do for a decade.
I know you have, Richard, and you know what's interesting as a publicly traded company, and you know, it was all the sexy things were sometime largely driven by investment bankers. You know, you could only be crude or you could only be product. I mean, I hate to tell everyone, we are diversified. We have crude and product. They are very linked because the crude is carried to a refinery where it is then refined and then moved. And so those two markets feed one another. As we now coming out of COVID, or, you know, I guess perhaps if we're not coming out of it, we're at least seeing the world start to reopen. When the refinery margins start to increase, you start to see a pull on the crude, right? So, you know, yeah, we're crude and products. The smaller ships have fared better relatively. Still, you know, nothing, you know, I mean, if you get to $10,000 a day, it's a good day. You know, we do have our, I call it our gem hidden in plain sight, our FSO, that pitches $10-12 million to Seaways after we pay the mortgage, and then next year it'll be $22 million when she starts a new contract. But yes, Richard, I mean, we do look at that LNG market. To your point, you know, that is a $200 million ticket entry market. So it is definitely hugely capital intensive. And you know, I look at all the different markets. We look at the LPG, we look at, you know, the LNG. Don't look too much at dry, even though dry is, you know, doing wonderful. You know, but we look at all these different markets all the time. And what I would say is we've been very focused on rebuilding our fleet, you know, over the last 5 years, and putting ourselves in fighting shape again on the tanker stage. So that's been our primary capital focus, right? Spent over $1 billion on new ships, on secondhand purchases, on the Diamond S merger.
That's really interesting to hear. James, can I bring you in there? I mean, that question of diversification that Richard's put to Lois, are you seeing many owners who are looking at that?
I think first of all, go back to what Richard said. I think that, you know, I mean, correct me if I'm wrong, but we've probably seen around 20% capacity reduced since 2008. What I've learned on many trips to Korea is that I don't really believe when it gets to this level of a government level within someone like Korea, that they would actually allow for such massive swings. And I think that the 2008 aftermath was definitely a major issue for the country's GDP. So there is that potential learning curve. I know that Richard's saying is that it's a short learning curve and we could go back to where we were again, but I think there has been a big reduction of capacity. I do think that what saves a lot of markets is probably the overbuilding in 2006, 7, 8 on dry cargo. We're now seeing the capacity get back to where it was again after all these years. I think tankers potentially, you know, I know that Richard mentioned to Dubai-based companies, but apart from that, we would have seen a lot of ships going, the present strength of the present scrap recycling market as it is today. We would see a more of a balanced market. And I think obviously the prices at the present yard have, yes, I guess a conventional ship for VLCC today, you could even argue as much as 105 million at today's yard for delivery in 2023, 24. But that's because of raw materials, etc. It's pushed that price. But that's definitely going to keep buyers away at those levels, which means there's a correction down the line as we start seeing OPEC gradually drip feeding here. And as you said about COVID, you know, obviously that moving away as the world gets back to more stability. So I think that's making it so interesting that there's normally some market that comes through. If we were sitting here and every market was flat, I guess we would be sitting here starting to get a little bit worried, as for everyone around this on this panel. But the good thing is I take positiveness, even though the tanker market in my background is more tankers, being where it is today, but where the other present markets are, because you can feel that there's always a storm when we come out of that storm, and the tankers will come back through, as will dry will slip back, or containers. It's all part of the business, which makes it so fascinating, and it makes it very hard to believe. But going back to the original question, which is about where we are on fuels, I mean, I don't know where this conversation can go. You start from where is shipping has a an element of how we can reduce ESG, but the fact is, whether we try and reduce it from the bunker tank, or are we taking it from the world? Because we know there's a lot of carbon extracted from fuels, and what's the right on the fuel basis there. So there's obviously lots of conversation regarding that, but the fact is, we've obviously got to, we have to sort of move forward in that respect as well.
Okay, thanks, James. I mean, Paolo and Andrea, what do you think when you listen to this conversation for your businesses going forward, supporting the sale and purchase and new building markets, essentially? Andrea.
It was actually a very interesting debate to hear. It's if I start from actually the last point that James made on looking at what is the actual carbon footprint of fuels, and I think that I don't believe in a sudden change. I believe that this will happen segment by segment. The closer the segment to, for instance, companies that deal with consumer goods, or companies that have made public ESG commitments. So companies are prepared to pay a premium that will initiate the potential development of tiered freight market, where you're prepared to pay a premium because you get something out of it, because you can place your product differently. I would assume that's the way. I personally believe that's the way this is going to come in, and it also will come in gradually. I mean, on one end, the fact that this will happen gradually will also solves the problem of the availability of the fuel. There is no doubt that this green fuel, so-called, will be available in small amounts in the beginning. And as Paolo mentioned, we cannot think of maritime being the place where this is sorted out. I mean, it will be sorted out on land by other industries who need those fuels. Some of these fuels actually we call them fuels for other industries. They are chemical compounds essential for their own final product. If you take ammonia, it's a key for fertilizers. So I think there will be teaming up between industries there to reduce the cost of these fuels and guarantee offtake from the production plants. Another element which is key to sort out the problem is availability of biofuels, biomethane, for instance, and ramp up that kind of production. Now, the issue with this is that any industry you pick, any heavy duty industry you pick, they're all going for this. So the question is, will be available for maritime in the end? And I've not seen legislation securing that. So legislation is asking for this to happen, but it's not maybe giving a preferential route to maritime to access it.
Okay, thank you, Andrea. Paolo, any final thoughts?
Well, I think that at the end we will definitely go for a more 360 degrees approach of the fuel production. That's for sure, because already we see it by the new EU taxonomy and so on. It's clear that if you put, let's suppose that tomorrow we are ready to go with hydrogen and fuel cells, but you put on board the gray hydrogen that is coming out from fossil industrial production, this is not making the case. So what I'm expecting for sure is that, and again, in this maybe even EU will and other industry will give another let's say supporting decision is to go not only on the ship itself but on the overall production of the fuel, and of course more and more the finance. The ESG certification will also change a little bit. We are quite used to deal with prescriptive schemes when we come also to this type of green certification. We will go more and more towards bespoke certificates, goal-based standards, and necessity of clear KPI definition.
Okay, thank you very much. So, I mean, Lois, just coming back to you as a ship owner, you know, in terms of what's next, the existing fleet, I mean, working hard on making it as efficient as possible. I mean, that question of diversification, I guess there's, you know, issues of in the public markets of not giving away your strategy online. But, you know, is that something that, you know, you think that the investors are going to drive you to look at?
Well, you know, it's very interesting because we're in a time of change, and some investors are still very fixated, rightfully so, on simple shareholder return. And then you have a group of investors that are willing to support more innovative investments. And I think that tanker companies, including our own, will increasingly invest in, you know, greener options, alternative fuels, you know, carbon, you know, all the brokers are ramping up with their carbon trading desk, you know, and, you know, all of these different areas for owners are available. It's a little bit of the Wild West, and we have to see, how do we pivot and how do we make sure that in 5 years' time, we're still in the pack, leading the pack in that hunt of, as the world decarbonizes and we're moving energy, how we compete.
In what is a really risky business, a highly cyclical business, likely to remain so. James, Richard, any final thoughts in our final 2.5 minutes?
James, you want me to go first just to respond to Lois? Listen, the world of shipping is facing a significant challenge, and it's called, how do you manage your carbon tax? Because you guys are all going to be paying for every ton of CO2 that you emit, and it's 3.2 for every ton of fuel, and it's 2.7 for every ton of gas, more or less. Okay, so at the moment we have an immediate response, which is the transition fuel. I chose the LNG fuel as the transition fuel to try to get us to 2030, 2040, 2050, wherever it is. We see there's a huge amount of demand increase for that. It's not the longest term solution. Nuclear, I agree with whoever said that. Sorry, forgotten who said that. I think that's probably a long-term solution. But let's be practical. We've got to actually get people to invest in shipping and believe in it. Let's actually be optimistic about the sectors that actually hold real prospects. We don't have any prospects in the tanker business unless we can find a way of solving the oversupply of tonnage. We do have a future in the container business at the moment, which may not look quite so bright in a year's time, because that's a cyclical market, it's a short cycle. But there are lots of people who want to invest in shipping and actually get guided by the experts in the various different segments in which they are in. Right now, it's just difficult for guys in the tanker market. I feel very sorry for them. We got a lot of tank brokers who would love it to be very different to where it is today. Let's be practical. There is a solution out there for every different type of ship. It's not the same one, but it sure as hell is going to rely on a lot of optimism from the people who are in the most difficulty, and just a little bit of sanity for those people who are being tempted by huge returns. I'm talking of the container owners, particularly. Martha stuff. Thank you very much indeed from me.
Right, Richard. James, any final thoughts to take us to the end?
No, I'm just listening to Richard. That makes me smile in the way. Yeah, I can't really disagree with what he's trying to say there. Obviously, every ship owner has some sort of, you know, they have to sort of move. We have to all move forward with the times. This time we have no choice. This is where we're going. We have to do this. The trouble is trying to pass that cost on somewhere. And the problem with shipping, it seems to get squeezed and squeezed and squeezed at every single point, which stops potential reinvestment into new ideas and new and modern ships. That's the biggest problem. But I can feel on the container side, there's some poor, you know, furniture man obviously moving his products from east to west, and he suddenly hasn't allowed for his shipping cost. His business has probably gone under. So, you know, it's just the way it is. But I can see we're not really sure which way it's going to go yet, as far as which fuel or which products is the right way. But I'm with Richard. The most possible way is to make sure that we eventually find that factor going forward. So that will happen, sure.
All right. Well,
So,
thank you, James.
So much.
Thank you, everybody. Nicholas will come in a minute, probably to officially thank you. But thank you, Paolo. Thank
Absolutely. I'm right here, and
Andrea,
I just want
James,
to say,
Richard.
as expected, it has been a great discussion. And I mean, this is one of the topics that ship owners face day in, day out. And thank you for a tremendous panel. I'm so privileged to have you on board. Thank you to all.
Thank you.
Great to be
Thank
with you all.
you all.
Thank you.
Take care, gents.